Hello traders, and welcome to this training session which is going to be about fair value gap concept. What I'm going to do in this session is to talk about fair value gap again and to make sure you understand this concept very well, which is very important when you are trading based on the ICT strategy. So the next point is going to be about the importance of fair value gap, which is acting as support and resistance. So let's jump to the chart, and this is a daily chart for the crude oil, and you can see all these blue lines which I already made it on the chart. These are all the actually some of the fair value gaps in the daily chart, because if I want to put all, it will be too much crowded and the chart you cannot understand very well. So that's why I put some of them for just the teaching purpose. So let's zoom on the chart, on the daily chart, and here you can see this is the fair value gap. Each blue line that you can see on the chart is considered to be a fair value gap at a specific point of time. Always remember, fair value gap is there in every time frame. What we are discussing is in the daily chart. Definitely you can go to any time frame and find different fair value gaps. The crude oil market as of now in the weekly chart is bearish. So that's why the importance of finding fair value gap to the downside can be more critical in this situation. So here you can see the blue line, first one on the top, is the distance between this candle low and this candle high. So this distance is called fair value gap. What I mean by that, it means there is a fair value gap between these two candles. There is a gap which can be retested at any point of time, and of course when we are bearish in the market, that can be a possible entry to sell for the sell side liquidity. So of course you can see this candle is coming up, this bullish candle is coming up inside this fair value gap, and then it's pushing down to break this low, which is the sell side liquidity. This is repeating in the market when the overall market is bearish. So consider this is the daily chart. So of course when you go to the lower time frame, even if the overall market in the weekly monthly chart is bearish, definitely in the lower time frame like 5 minute, 15 minute, 1 hour chart, you will have those scenarios that you can buy for the short time. So in that case you will have two options: either to wait for the bigger picture scenario to sell in the higher time frame, or if you want to be very active, then option 2 is to go for those short-term buy in the lower time frame, and then you can even have the chance to enter in the bigger picture for the long-term sell. So here if you can see, before I want to go to the lower chart to show you that how these lines are acting as support and resistance, because that's actually the main purpose of this short session, is to prove that each of these fair value gaps, especially in the higher time frame, I'm emphasizing on that, especially in the higher time frame, meaning daily, weekly, it can act as a very good support and resistance. But definitely, if you go through your chart, you can see even 1 minute chart fair value gap can act also as support and resistance, but not a strong one, it's a weak one. So here you can see when we come to this chart, there is one more fair value gap here, which here is acting again as support and resistance. So if I want to put something to here, you can see this arrow which I'm putting on the chart. You can see this is the fair value gap which I'm talking about. Okay, so the market is going to that area to retest that fair value gap because it's already bearish and it already broke that short-term low. So it created that short-term, actually the fair value gap, and then it's acting as resistance for the price action to push to the downside. Same thing happening again here. As you can see, let me just put this arrow again down so you can see that here is the next fair value gap, and then again you can see this candle high is coming and going above that fair value gap inside this fair value gap, which is the distance between this candle low and this candle high. So then it's coming back up above this high as a daily manipulation above the previous high to take the buy side liquidity, and then it's going to the direction of institutional order flow, which is bearish. Again, the next one you can see here, we have another fair value gap between this candle's high, as just follow my arrow so you can understand, this high and this candle low. So there is a distance between these two candles, the high of the current candle and the low of the previous candle. So that is the distance which is called fair value gap. Again, market is pushing to the upside as a retracement, and now you can see in the last 2 days market is pushing to the downside, while we have still this fair value gap untouched, which is the possibility of the next week price action. If it wants to go there, definitely we can have another chance to find the sell setup. Remember, it's a chance to find the sell setup. Definitely you need another confirmation, because at one point of time we may see the market is going to reverse, and even in the higher time frame it can be bullish. But for now the weekly and daily is bearish, and these are all short-term buy which is happening to manipulate those retail traders. Actually, the whole purpose of this price action is to deceive the retail traders, to manipulate the price action above and below. Above to take the buy side liquidity, and below to take the sell side liquidity. And this is the way that we are trading, and that's why we are successful, because we are following the smart money concept, and especially based on the ICT methodology. That's the way to trade in a smart way and to not be trapped in the way market is trying to trap and deceive those retail traders by taking market to the upside and just to convince them it's a time to buy while it's a still sell. Okay, I hope you understand the main point of this discussion so far. I'm going to just jump to the 1 hour chart and to show you how these levels are perfectly acting as support and resistance. So let me just take my arrow again so you will see which point I'm talking about. Please don't forget to leave a comment, so I want to see if you like the video and if you're following and if you're understanding the concept. In case of any question, please do not hesitate to raise it in the comment section. I will definitely either reply to the comment, or I will consider to show you in the next video to ensure you understand the concept properly. So here you can see all these blue lines which I already put in the fair value gap in the daily chart. Now we are in the 1 hour chart, and you can see how perfectly these lines are reacting to the price action in the lower time frame, which in this case is a 1 hour chart. Trust me, if we go to the 1 minute chart, even you see the proper reaction to these levels. So here you can see this is a reaction as a resistance. Price is coming back down below the blue line, retesting this as a resistance, going back down. Again, breaking the line, going back up and going back down. Again, coming back up. See how it is keeping it as a resistance to push the price to the downside again. And here again you can see this chart, how it is showing the price is going down, breaking this level, going back up, resistance. So this is the real support and resistance which you are learning in the retail and retail trading in a wrong way. In a wrong way. I'm confidently telling you that is the wrong way, because you will never see the support and resistance in the retail market is showing this much accurate reaction that we can see in the fair value gap. So fair value gap is there to be followed, and I just wanted to show you other than our strategy, even you can use the fair value gap as a support and resistance. So for example, if the market is breaking to the low, you can see market is coming back up, and definitely it will reach to this fair value gap, acting as resistance, and then in the 5 minute chart or even 1 minute chart you can start to sell to the downside. So basically every time market price action is trying to reach to these kind of levels, you can consider to buy and sell based on the scenario and the strategy which you are following. As I already explained in the whole video, it is all about the time frame, and it is all about the long-term picture and short-term picture. If you see the big picture is a sell, then wait for the market to reach to these levels and start selling after you see the reaction. Definitely there are some time, for example here you can see the market is pushing to the upside, breaking this level, coming back down, again breaking the low, but here again finally it's finding it as a support and market is pushing to the upside. And here again another kind of resistance testing, and now it's preparing to go to the downside because this resistance is already retested. So market now can push to the downside to break this low, which is the sell side liquidity. Okay, that's it for this video. I hope you enjoyed this video and this learning. So do not hesitate to leave a comment with your question. And until the next time, thank you for watching and talk to you later.